Oftentimes, when we're talking about real estate contracts, we think about the big contingencies. Those usually include inspections, which is the biggest one in most people's eyes. Appraisal is another one, and financing. But we're going to talk about in this series some lesser contingencies that people may or may not even think about. They just kind of go on during the transaction and we expect them to happen. But let's talk about some of those. So in this first video, we're going to talk about the insurance contingency. Not a lot of people even realize that this is a thing. If they're financing, their loan officer usually comes alongside of them and directs them when it comes to this particular contingency, but it is important. So back in the day, probably up to the early 2000s, the insurance was the last thing that the buyer would purchase prior to closing, and sometimes the buyer wouldn't even have checked on insurance at all during the transaction. So we would get ready to close, and the buyer would find out that the cost of their insurance would actually take down their financing, because when it's included as part of the payment, if their insurance was higher than they expected, then the payment would be too high. So it would tank everything at the last minute. So if you're in Greater Cincinnati and we're filling out a Cincinnati board contract, we do have a section in there for insurance. Typically, people like to take 14 days in order to make sure that their insurance quotes are going to be within range for that property that they're expecting in their overall payment. So just keep that in mind with the insurance contingency and follow the direction and advice of your loan officer, but make sure that you stay within whatever time frame that you stipulate in that contract. Typical is 14 days, but it's an arbitrary length of time. So you might want to consult with your agent or your loan officer before having that filled in on the contract. Again, this isn't a big contingency, one of the big ones that we expect. It's not one of the big three, but it is definitely important in the contract. And it's very important to make sure that you get that insurance investigated, know exactly how much it's going to be so that you're within that time frame. And if there's something that's unexpected that causes your payment to go up and causes you not to qualify for that loan, you want to find that out sooner than later. So whatever time frame you establish for that in the contract that's negotiated between buyer and seller and accepted, just make sure that it gives you enough time to do everything that you need to do. If you have questions about this topic or any other real estate related topic, you can reach out to me by phone, text, private message. And if you're watching on YouTube, click subscribe. Thanks. Bye.